Welcome to the lab. If you ask a junior auditor how to perform a process audit, they'll likely describe a transactional review, dividing the business into departments like sales, purchase, and logistics, and pulling samples to find errors. This approach breaks down under the weight of statutory compliance. A simple business faces thousands of laws. If the tracking system is broken, checking random transactions misses systemic gaps. We must move past the paper stack to evaluate the structural integrity of the workflow. A genuine process audit evaluates the workflow from its absolute start to its final finish. You map the objectives, the environment, the interdependencies, and the control vulnerabilities, long before you ever look at a single final number. Auditing the structure allows us to identify the root of systemic failures before they manifest as thousands of individual errors. By testing the integrity of the framework, an auditor provides a more reliable picture of institutional risk than a random sample ever could. We build that framework starting with Step 1, ownership, and Step 2, baseline identification. For every category of law, tax, labor, environment, there must be a designated owner. That individual must hold a signed statutory applicability register, detailing exactly which laws apply to their operations. Next, we map Step 3, the tracking mechanism. We need to verify the actual tools the business uses, whether it's compliance software or a master tracking spreadsheet, to monitor daily, monthly, and annual deadlines. For Step 4, regulatory updates, we check the inputs. There must be an incoming feed, like an external legal subscription or retainer agreement, ensuring the company quickly identifies new amendments and Gazette notifications. Step 5, periodic training, completes the loop. We examine annual training calendars and attendance logs to verify the compliance owners receive regular education on these regulations. Validating these 5 foundational steps proves the existence of a proactive compliance engine. It allows the audit to focus on the systems securing future stability rather than simply cataloging past errors. Once the foundation is solid, we advance to Step 6, evidence management. You need to confirm that actual filed returns, challans, and certificates are securely maintained in a centralized digital repository or a physical index. Challenging. Let's test this with a scenario. A company misses a major tax filing deadline and pays a fine. Look at this graphic. Which document should you request next? The late fee receipt or the root cause analysis log? You need the log. Step 7 is root cause analysis. Confirming the penalty payment only verifies the transaction. We need documented corrective and preventive action logs to understand why the deadline was missed and how the department has adjusted the system. That requires Step 8, board visibility. You review the defined escalation matrix to ensure that systemic risks and critical non-compliances are actively reported to top management and the audit committee. Step 9, notice management, secures the perimeter. You verify the existence of a centralized log tracking all government inspections, queries, and show cause notices. Documented protocols for managing and escalating exceptions provide the clearest evidence of a functional compliance culture. When these systems are in place, errors become data points for improvement rather than unmanaged risks. At this point, you might be asking, when do we actually look at the data? That happens in the final phase, Step 10, sample validation. The golden rule of process audits applies here. We don't sample financial transactions to prove compliance. Instead, we pull targeted samples of the process workflows, the training logs, the CAPA reports, the evidence management repositories, to validate that the operational reality matches the documented system. This chart shows the complete 10-point corporate governance audit framework, from assigning ownership and identifying the baseline applicability, all the way through tracking, root cause analysis, and final sample validation. You now have a holistic view of a process-centric audit. To master modern risk advisory and implement these frameworks in your own practice, visit riskvigilantbharat.com today.